Welcome to CouncilCast, news bites and insights from the Council of Insurance Agents and Brokers. I'm Cheryl Matochik, Senior Vice President of Strategic Resources and Initiatives, and it's a pleasure to have Nick Shalek of Ribbit Capital join me today for a quick update on a lot of the moves and bets they've been making in the insurance technology space. They're a venture capital firm based in the Valley. And Nick, why don't you, we met back in 2016. We had Nick come out to one of the council's board of directors meetings when we were in San Francisco. And, it would be great to get an update on, the company and what you guys have been up to since we saw you last in 2016.
That's great. Thanks, Cheryl. Thanks for having me and for making the time. So our journey in insurance has been organic. We're investors in fintech more broadly, so in things like lending and wealth management and personal finance. We definitely had some views in, say, around the time we met or a little earlier in 2014, 2015 about what we wanted to invest in insurance, but it's been a good education the past couple of years figuring out where we think the biggest opportunities are. In 2015, if you'd asked us, what do we want to do? We said, well, we want to find technology entrepreneurs who are trying to build new brands. And so mostly that was on the personal line side with a little bit of emphasis on small commercial. So we invested in companies like Jetty or Root or Health IQ, which are all brands focused on personal lines. But we also invested in Next Insurance, which is a small business focused MGA and moving to become a carrier now. If you fast forward to today, I think those companies have started to grow up and actually build, real businesses and have customer bases and be dealing with, questions around growth and profitability and stuff that was, really just nascent conversations a few years ago. And where our attention in terms of new investments has turned, I think is in a couple directions. One, into entrepreneurs who are building products that can be distributed through traditional channels. So we backed, for instance, a company called Coalition, which is a team of former NSA and CIA guys who are great cybersecurity experts who now are building a cyber insurance business. And they've built a product that we think, any broker would be crazy not to want to sell because it's really valuable to the customer. And then the second thing is we're seeing more software companies that are owning customer relationships and data who want to be in the insurance business, either as providing a lead or actually doing more fulfillment. So that would be businesses like Gusto, which is a payroll company that we backed, and we're spending more time on that.
So that's great. Very interesting. The Next Insurance and Gusto, obviously, we've been watching very closely, along with a couple of the others, Policy Bazaar and Jetty. Any updates there that we should be aware of?
Yeah, Policy Bazaar is an interesting business because just for background, Policy Bazaar is the largest online insurance business in India, and they started as a comparison business, something akin to what you'd see in the UK with a Money Supermarket or a Compare the Market. And really, over time, they've gotten kind of deeper and deeper into the value chain. Their carrier partners and reinsurance partners are looking to them to do more of the servicing and claims and even the underwriting. So I think you just see them now, but kind of becoming a brand that a lot of consumers in India are looking to get insurance, to make it fast, to make it low cost and flexible and customized. And Policy Bazaar is a great example of a company where the lines between broker and MGA and carrier are kind of blurring in order to focus on the customer experience. And then, of course, that's all happening in a very fast-growing market in India. And so you have a lot of consumers who have never bought insurance before, and this is the only thing they really know. So I think it's a sort of a portent of what we'll see in the U.S. And that's happening across fintech, where what's being built in China or in India, it's actually sort of leapfrogging what we're doing in the U.S. because they don't have the legacy channels and systems. And so a company like Ant Financial, which is Alibaba's financial arm, right, kind of skyrockets to $150 billion valuation in a short period of time because they figure out how to use modern software and mobile channels to acquire hundreds of millions of customers in a way that you would never think is possible in the U.S. market.
Oh, it's helpful. I mean, the other thing I saw a couple weeks ago, I believe, Ribbit Capital announced a new fund. Can you just give us a sort of overview of, where you are as a company and what that newest fund is oriented around?
Sure. We started in 2012, and since then we've raised 5 funds. This is our 5th fund that we just raised. Um, we Because we're a very thematic firm, we really focus on financial technology globally, and we try to find entrepreneurs who are great technologists who want to build new financial products. Um, the size of our funds, the pace is really driven by the bottom-up opportunity that we see. So there's not a lot of there's not a lot that we're going to do different in the 5th fund than in the 1st fund. We're still looking for the same thing, which is we think there's $18 trillion of market cap that's at risk in the financial services industry globally. Over the next 10 or 20 years, as the world becomes more digital, we'd expect to see the same thing in finance that's happened in media or commerce or other spaces where you see a few $1 billion trade hands, and some of the recipients of that market cap, or some of the winners, will be incumbents who get very serious about technology, but some also will be startups. And all we're trying to do is find the great entrepreneurs who can capture some of that market value shift and be own as much of their companies as we can. So that's what we'll keep doing. There are some smaller things tactically, but thematically it's still the same idea.
How do you see some of these companies, trying to grow, thread the needle between growing too fast but not being too slow, and really trying to manage innovation and risk that come hand in hand? As you look and evaluate these companies, where you see the more successful ones that you're making bets on, how are they approaching that?
I think the most successful companies that are startups are always going a little faster than they should. And the reason I say that is because in financial services, there are so many things, in any industry, but especially in financial services and insurance, there are so many things that favor the incumbents. You have deep regulatory relationships, you have big balance sheets, you have brands that customers know, $1 billion a year in marketing, for any given large brand, just imprinting that brand in hundreds of millions of customers' brains. So if you're a startup and you want to compete with that, you really have 2 things, or maybe 3 things that you can use to compete. One is you're starting from scratch, so you don't have any legacy systems, legacy channels, legacy technology. 2, you can move faster, you can take more risk, you can iterate faster, and that's really the currency of a lot of our companies. And the 3rd thing is you have access to a different kind of talent that's excited about being part of a technology companies. So a lot of our, we try to back technology entrepreneurs who understand risk and are focused on building regulated companies and what that takes. It's not the same as building a social network, but we would never back an entrepreneur who we thought moved slowly and deliberately. It's the wrong DNA to try to compete in a very competitive world where you have none of the advantages of the incumbents.
Right. I figured I'd hazard a guess that would be your answer, but no, that's helpful insight from you, and definitely, our core sort of, audience, obviously, as is the leading commercial insurance brokers in the country. And, they find this perspective very interesting because they're not dealing directly, typically, with venture capital fund or firms every day. What would your advice be to those executives or in leadership of those firms as far as how to stay on top of the action, the market dynamics, the keeping aware and being exposed to new market entrants, as well as the existing ecosystem really changing? Technology is breaking down those borders and making it a very porous sort of atmosphere between traditional sort of players in that insurance transaction. What would your sort of advice be around that?
Before giving my advice, I guess you probably already know it from this conversation, but it's where starting where my perspective comes from, which is this is really an existential threat. It's this will dramatically change the industry in the next 10 or 20 years, and I see the insurance value chain collapsing over time. You're really going to have who owns the relationship and who owns the risk, and there's not going to be that much in between. So if you take that perspective, it might lead you to pursue some more dramatic conclusions. I think there are 3 things I would recommend. One is before you jump to too many conclusions, I would look at other industries. You look in a company like WeWork in commercial real estate, which is a $40 billion business, or Square, which is now almost a $40 billion business in payments. those are two companies where probably over the last 6 years, I've had dozens of conversations with executives from those industries telling me those companies are going to go out of business. And maybe they will, it will take time, but my bet is those become transformative companies. And they had to do that by breaking the rules. So study other industries just to increase your awareness of how much things can change and how players with different perspectives can come in the industry. The second is I always recommend find one smaller company to partner with, somebody who moves much faster, and put pressure on your organization to move at that company's pace. So find a startup that you wouldn't normally partner with and partner with them, because it'll make you more aware of your own, the bottlenecks in your own organization, and help you and your team get insight into how you can iterate faster, which, again, I think is where bigger companies can fall down or getting stuck with old assumptions. And the third, and probably the biggest one, is find some way to personally, your executives, your CEO or your executive team, to engage deeply with a couple of startups. Doesn't even have to be in the insurance industry, but if it's in insurance or financial services, that's great. A great way to do that is have the CEO of your company go on the board of a small, fast-moving venture-backed company, because I think that's where you can get real insight. The company can get a lot of value from your perspective, what you know about the industry and relationships, but you can also get a lot of value from seeing how they think about their priorities, how they hire, how they build technology.
Yeah, those are excellent 2 points, and certainly we've echoed that in our messaging with member companies. That historically haven't had a lot of interaction with startups, of those being 2 very concrete steps that would really help. Also with the biggest challenge they have, which is sort of creating and implementing that business process implementation piece and trying to integrate it into what they're doing. With so many things going on, right? As you're driving down that highway, there's a million exits of different things coming at you, and trying to make sure that you're sort of staying ahead of the curve with this stuff, but also tending to the core business. So those are great comments.
I think the important thing is it's not something to monitor. If you sit from the outside, or you set up a venture group or a strategy group to watch it, that's actually, you don't get the insight that you need. You have to be in the arena and engage, whether it's through partnerships or being on a board or investing in a meaningful way, and it has to go all the way to the top, because the change to transform a company that's been doing business one way very successfully for a long time into a business that's very successful in a new world, you really have to see it at its foundational level. That's why a company in the financial services space that I think is doing this well is Goldman Sachs, and if you look at half of their job openings globally, they're for engineering, and that's thousands of jobs. I think if you're not taking it that seriously, you're probably falling behind, and you won't see it tomorrow or next year. It'll hit you suddenly in 10 years.
Great advice. Thank you, Nick. I think we'll leave it there for today. I have one last question. I'd be interested. You see so many different companies. We're all consumers. What's like the coolest company that you sort of has blown the doors off in the last, couple months that you've seen, either in the space or outside the space? It can be in any sort of industry.
I know I'm a broken record on Coalition, but this is now our biggest bet by dollars in the insurance space, and I just think it's great to see a team that didn't start wanting to build an insurance company, but really started from saying, how do we solve the cyber security problem that's this growing massive risk and threat to people all over the world? And how do we get small businesses, medium-sized businesses, to be better at managing their cyber risk? And Coalition then sort of worked their way towards saying, hey, insurance is an important part of the solution. But just the quality of the technology and service that they bring is really something different, something you don't see in financial services or insurance all the time.
Well, excellent. Thank you so much for your time today. We will certainly be keeping all of our members posted and on these developments and the companies that you guys are invested in. And really just love the opportunity to sit down with you today, Nick. So thank you.
Thanks for having me.